Well, good morning from beautiful sunny Sedona. It's a lovely spring day here. Ready for our April market update. Before we do that, just want to make sure so you can put a face to the name. If you when you talk to somebody in the member of the buyer brokers team. First, my lovely wife Michelle.
Hi, this is Michelle from beautiful Sedona.
And Terry McMahon, my assistant and transaction coordinator and woman of all trades. Well, the results are in for the market report for the first quarter of this year. And what we're seeing basically is a continuation of a trend that began in earnest about this time last year. We saw a significant jump in sales in the second quarter that continued as stronger as the year went on, and obviously continued on into this year, because right now, compared to the first quarter of 2009, the number of single-family home sales has doubled in this year compared to last year. The inventory is actually down a little bit. We're about 25% fewer sales on the homes on the market right now, but clearly the demand is way up. But interestingly enough, the price is still roughly the same. It's actually down about 10% from first quarter last year. So it's been in that. It's right now about $390,000 is the median recorded sales price at the moment. Was up to over $400 last year, but this time but it's been fluctuating in that zone for quite a while now, for the past year. That's kind of a violation of the law of supply and demand, though, because demand is obviously way up. If we're doubling the sales and the supply is down, what's going on? Well, what's going on is the continuing presence of foreclosures in the market. That's had a depressing effect on prices in general. Obviously, those sell for less than market price, but they tend to pull everything else down. So I see that continuing on for at least for the rest of this year. I don't see that trending. We've had a slight decrease in the inventory of foreclosures on the market, but just saw a report today saying that there's about a 30% jump in foreclosure in the Phoenix area. So I think we'll probably see that kind of playing out. We're going to see some more foreclosures coming in onto the market. So we're probably going to see a jump in the inventory with foreclosures. So that'll keep the prices down. Great news if you're a buyer. Not such great news if you're a seller. But then again, at least if you're a seller, you can take some comfort in the fact that there's a much better chance that you're going to sell your property, but probably not for what you were hoping to get for it. In general, the market is actually looking fairly healthy. If you look at the last couple of years, the sales are double what they were in both 2009 and 2008. If you go back to 2007, we're 30% beyond 2007. We're actually getting back into the range of what we saw in the early 2000s. So normally back in those days, we were in the about 400 to 500 homes a year sold. Back in 1999 to 2000, 2001, it was 2002 and through 2005 where we saw them creeping into the 500s. But in the 400s is pretty respectable, and I would expect we're going to see that this year. Right now we're just a little bit behind 2006 in terms of the number of sales, but I would predict by mid-year we're going to have exceeded 2006 sales. So I see in general a real healthy trend in terms of numbers of sales, and frankly those prices staying low is contributing to that. That's helping. So that's the story overall with housing. In the luxury market, that's pretty much been kind of dead in the water a little bit this year so far. Only one sale over $1 million this year. But we're also seeing some activity there in the pendings, those that are under contract. I've seen a big jump in the last couple of weeks, in fact. So we are seeing that market starting to move. In land sales, another segment of the market that has just been languishing. Even that we're starting to see. Nothing's happened there in the last 3 years, and now suddenly we're starting to see some activity in the land sales. So we are seeing that swing back to people are now considering considering land, because the prices have gotten down so low, and the cost of building is actually off a bit. So now that is an option for people that wasn't there before. It was always almost a truism, has been a truism for the last 2 or 3 years, that it's cheaper to buy something that's already built than buy land and build. Now that equation is changing somewhat. It's still probably cheaper to buy something that's already built, but if you really want to have something that design something yourself, then now at least it's starting to make some economic sense. That market, by the way, the land market is also somewhat driven. About half of the sales so far this year, actually a little more than half, have been foreclosures. So we're finally, what's pulled that market down into the affordability has been, again, the influence of the foreclosures. So all in all, though, I'd say the market is generally healthy overall, and it's kind of encouraging. I think we're getting, I'm not sure what normal is anymore, but we are starting to get back to something that's probably sustainable. And I think eventually, as we run through the market, through the foreclosures and whatever, things will stabilize, and will eventually Sedona is always going to be a place where people want to come. So I don't have any concern about the long term in Sedona. It's as you recall, we're an island surrounded by national forest. There's no place to grow to, so the prices overall are going to have to eventually go way up as time goes on. As the supply is going to get smaller and the demand is going to continue to build. So that brings us back to market timing, and the market timing is clearly in favor of the buyers now, and probably will be for the rest of the year. So y'all come on down. Thanks.